Hello, YouTube family. Dr. Kenyon Meadows here, the Invest Doc, formerly of Alternative Financial Medicine, but we have renamed the channel and we are also coming with a new commitment to bring you some good weekly content. So we invite you to subscribe, like, and share this. And we thank you for joining us. On this channel, we're going to talk about cash flowing assets, including rental property, dividend paying stocks, alternative investments. I'm from the Robert Kiyosaki school, where I believe an asset is something that pays you money. And so income investing is our focus on this channel. So got something I think will be useful for you. I've got my ebook called Buy Your First Rental, and you can get that by clicking on the link below and getting on our email list. And I thought to introduce it a little bit to you, we would hit some of the high points that are within the book and kind of talk about why I feel that single family homes are the best asset class that I have invested in. So I got started in my real estate investing career back in 2013 in a serious way. And since that time, I've tried a number of different assets, including obviously single family homes, but also I've loaned money to house flippers, and I've done some of the newer things such as real estate crowdfunding. And while they all have their pluses and minuses, I think that investing in single family homes, or in general, the direct ownership of real estate, gives you the best combination of cash flow, potential appreciation, although that's not the main reason why I invest, tax advantages on your returns, and also the prudent use of leverage or debt. And I emphasize the word prudent because we all know what can happen when people borrow too much and we have a financial crisis a la 2008. But anyway, the title of this video is Single Family Homes, Are They the Best Asset Class? And let's talk a little bit about why I believe that they are. Now, I want to start off with a quote from somebody that we all know, and that's Warren Buffett. Now, Warren Buffett is generally regarded as the greatest investor of all time. And most of us who have a casual knowledge of Warren Buffett, we think of him as a stock investor. And indeed, that is the majority or a significant percentage of what he does. But he actually invests in a lot of different alternative assets. And one of the things he said in 2012, when asked, because people are always asking, what's the next big thing and what's the best asset class to get into and everything. And he made a very profound quote. He said, if I had a way of buying a couple 100,000 single family homes, I would load up on them. So that was back in 2012. We were still dealing in the aftermath of the financial crisis. We know that there were a lot of homes that were on sale at fire sale prices. And so, of course, that represented a good time to buy if you had the cash and the credit to take advantage of that. But more so than what the financial crisis provided for us, there are some very big factors going on just in general that are making investing in single family homes in particular very, very attractive. And we cover this in the ebook, and we're going to highlight a few of them right now. Number one, psychographic. What does that mean? Well, that's basically just a fancy term of saying that the old idea of owning a home being a part of the American dream, that is starting to fade away as the millennial generation comes up and everything. They don't have the same high esteem for home ownership as generations past. And so that is putting a damper on people's ability or desire to want to buy a home. But of course, we know everyone's got to live somewhere, so they're turning to be renters. Additionally, younger folks value mobility, not being saddled with a mortgage and the extra time and effort it takes to when they want to move because of a job or something like that. not having a house and just being able to very quickly move around. So that's a big factor there. Number two, student loan debt. Now, student loan debt is over $13 trillion. It's more than credit card debt. And again, it principally is saddled on these young people. And when people are saddled with student loan debt, they don't buy houses as soon. And also, they don't get married as soon either. And marriage and having that first child, that's a big trigger point into people buying a home. So it's basically shifted these people from buyers to more and more wanting to rent. And that, again, increases demand for single family rentals. And it's just making the prices go up, both on the price of the home itself and the rent. An interesting thing that I learned, baby boomers. So they are big on downsizing. They oftentimes trade out of their big house, of course, to a smaller house with the empty nest, and as they get older and everything, but a significant chunk of them are actually trading down to rentals as well. That's actually been a big chunk of the rental demand over the past 10 to 15 years. And then the last thing too is supply. As other parts of the world, like most notably China, is starting to have a meaningful middle class, and there's a lot of new construction going on over there, and other parts of the world transition from third world to first world status. They have bid up the price of raw materials to build homes. Consequently, it's not nearly as economically viable for builders to build the kind of workforce average affordable housing here in America. So most of the new construction has been higher end homes that really don't make great rentals, by the way, but there's a lot more profit margin on an expensive home than on a median priced home. So we haven't nearly built enough new modestly priced rentals to meet all this new demand. And so again, consequently, what have we seen? Okay. So the blue line here represents median house prices, and we see a clear run up to the 2008 crisis here. And we know that was fueled by a lot of easy credit and people qualifying for mortgages that they shouldn't. And then we saw this very precipitous downturn in home prices. Okay. And now things are starting to rise again. And this is more of an organic rise because, again, the banks aren't just loaning to anybody. So this is real, more real demand for home prices. Now, look at the yellow line, which is the median gross rent. You can see that despite the fluctuation in home prices, the median rent actually just continues to just go up slowly over time. Again, reflecting all of that steady demand for rentals. Okay. And the bottom line here is median household income, which has not kept up with home prices or rent prices. And so obviously more and more people are getting rent burdened and home price burdened in general. And that's not a good thing either. So, but the bottom line is you have a lot of factors that are just pushing rents up. Okay. So, and to transition a little bit, so that median asking price for rent in 2019, it's right at about a little over $1,000. Okay. And so in order to be an ideal rental, okay, we talk about this thing called the 1% rule, meaning you want to get, as an investor, you'd like to get 1% of the purchase price of your home as rent every month. So the math's kind of easy here. So if the median asking rental price is $1,000, and again, median means half the people are paying above that, half are paying below that, then you want investment properties that are right around $100,000. Okay. And so that starts to shape where in the country it makes sense where these types of properties are available. And right off the bat, as you might imagine, in really, really expensive coastal areas like New York and California, much tougher to find rental properties than in other parts of the country. And this 1% rule comes from the notion that assuming that you have debt service on the property that you have to pay as the investor, the rent should still be enough to cover your expenses, and you should at least be able to break even or ideally make at least a couple $100s of cash flow per month on the property. Okay, so we're right at about the 10-minute mark. We're going to do a series on the book here. So we're going to stop here. But again, I would encourage you all to get the book down below. It has all the things I'm talking about in detail here. And in part 2, we'll get into a little bit about what kind of markets and what kind of neighborhoods that you want to select for your ideal turnkey rental. And remember, like and share and subscribe. Appreciate it. Thanks.